Good morning. Welcome to Forex in Four. Today is Tuesday, August 9th, 2011. Wow, testy Tuesday, I guess. We're talking about the bloodbath we saw yesterday in the sell-off in U.S. equities. Right now we're looking at a 15-minute chart here of the S&P 500. Okay, and you can see that we've had this massive sell-off, all right, from 1,200 all right, down to the overnight lows of about 1080. All right, that's quite a significant move. I think yesterday was the sixth largest one-day down move in the history of the markets, and that was quite a sell-off that we've seen yesterday. So, you know, the actual currency markets behaved somewhat orderly, okay, but we've obviously got some unwinding going on here. All right, this S&P downgrade really kicked off you know, the start of what's just, you know, being termed as global slowdown, and people are starting to realize, hey, wait a second, you know, where's the money coming from? Where's the growth coming from? And the answer really is nowhere at this point. So, you know, with the removal of QE2, okay, the artificial pump that the Fed had given to the markets, all right, we're now giving it all back. Now, on the flip side, this may be a good thing because it's lowering inflation expectations. I'll get to that in a minute. But, you know, there's a lot of fear in the markets right now, and these things have a tendency to get out of hand if things you know, don't turn around. So you can see here we had a bounce off the morning, and actually U.S. stock futures are higher to start the morning. All right, but I want to show you something interesting, is that we've had this flight to safety going on. All right, and one of the safe haven assets that we talk about is the Swiss franc. Now the Swiss franc is I'll wait for the chart to pull up here. Swiss franc is a safe haven currency, all right, and it hit an all-time high versus euro last night. You can see here it came down to 105. Wow, that's pretty big. Let's just go out here to the daily chart so we can see this. Okay, but you know, we also know about the problems in the eurozone. All right, you've got the different crisis going on over there. All right, they were talking about the banking system. All right, yesterday bank stocks sold off here in the U.S. People are concerned about U.S. banks, but you got to realize we don't have a liquidity problem here, and this is a lot different than what we're seeing in 2008, which was just a general potential collapse of the financial system. We're not in that same boat yet, unless, you know, we start to see runs on the bank and things like that. But in Europe, the banks are not as well capitalized, and they also have exposure to sovereign debt, namely Italy, Spain, Portugal, Ireland, Greece, of course. So we've got ECB. They're trying to embark on their own quantitative easing. All right, but we still see that the euro's hanging in there. All right, and hold on, I guess this daily chart didn't pull up here for us, but we'll move back here, and I just want to show you Euro USD. Our Euro USD actually hanging in there. All right, and I'm going to pull it out to the, let's just look at this on the 2-hour chart here. Okay, Euro USD, you can see we've been, you know, making new lows, lower lows, and then like lower highs. We're in a little bit of a trend here. Perhaps that was a bit of a trend break, but you can see sideways action. We're holding above the 140 level, all right, constrained by 144 on the upside. So we're in some range-bound markets, and right now it's sort of a coin flip. You know, who's the bigger issue, Europe or the U.S.? Well, they're both big issues. So what that leads to is just the stagnation. But you know, talking about safe havens, want to get back to it. Let's look at gold. I mean, gold's made another new all-time high. All right, we're up at 1780 basically. That's where it is. It's pulled back to 1750 right now, but looking at it the other day, I had it right back here at about 1639 on that breakout, and said, man, it really looks good. And sure enough, you know, with the downgrade, you could just see all the money poured into gold. So gold has been on a tremendous run. All right, you can see oil prices now that we're talking about a global slowdown. All right, oil's been selling off here. We got under an 80 handle earlier today, just back above it. All right, so who's being affected by this? Well, I was just talking about euro and dollar, how they're sort of muddled around. All right, let's take a look at Aussie. All right, commodity currencies, boom, just a pretty straightforward sell-off here for the month. Started at 110, back under parity. That's a pretty big move. That's a 10% move right there for the Aussie, giving back. All right, we can also look at the Kiwi. Kiwi, same deal. When the chart pulls up, and basically, you know, commodity currencies are selling off because of this global slowdown. Now, overnight, we had China's CPI index come in, and it came in a little bit hotter than expected, showing inflation 6.5% versus 6.4%. And this has to do with all the liquidity they provided to their market, so they're working that through the system. All right, but it's possible they could raise rates again, but you know, we'll have to see what they do in China. But they need to slow that down a little bit, which is going to add further pressure to Aussie and the others. Dollar CAD, okay, you can see dollar strength at 94. right up to parity, and now we're just hanging out right underneath there. So been a lot of movement lately. Don't want to forget the pound. Let's take a look at the pound here. Pound's sort of in that middle of the road zone, like the euro and the dollar are. There's actually riots going on over there. I haven't seen a lot of news coverage on it, but a little bit of a craziness. I keep getting all Twitters and Facebook updates from friends in London, and the situation over there is getting a little bit scary. And it's this sort of thing where it started off as I don't know, somebody. There was a protest against police, and now all of a sudden people have turned it into rioting. Perhaps it's a little bit of lashback for the austerity measures that they're taking over there. They're calling these people students. I don't know if that's necessarily the case or not. But you can see here, pound, dollar, euro, all sort of settling in there. Lastly, let's take a look at Japanese yen. All right, yen's been strengthening. All right, we can see on the chart here, here was the intervention, and we can see how successful that was. Not at all. Right back to 77 levels. All right, still above that low for dollar yen here of 76.30, all right, which was also a low that held off of the repatriation back on March 17th after the earthquake and tsunami. So yen strengthening, and that's the safe haven trade here. We can look at dollar Swissy as well. Okay, you can see dollar Swissy strengthening as well, now just below 75 cents. So a lot of safe haven assets going on. All right, we have a flight to quote quality. So you've got people buying treasuries, even though the U.S. debt may be an issue. It's sort of counterintuitive. I mentioned that yesterday, but old habits are hard to break, so to speak. The situation's not so swell out there. It's a little bit ugly, but it definitely feels different than the last time in 2008. And I don't think we're going to be looking at a crisis of similar magnitude. Now, we're going to get the FOMC meeting today. It's going to be out in a couple hours, and it's going to be interesting, to say the least, to find out what Bernanke's going to do. I mean, is he going to embark on QE3 to try and thwart this? Is he going to just use strong language to try and reassure the markets? Is he going to let the markets know that there is a safety net there and that we're not going to have problems? This is going to be an FOMC meeting that's going to be very important, because it's going to have to allay the fears of investors around the globe. Okay, otherwise it could contribute to more selling. So, on a day like today, U.S. stock futures higher. You don't want to step in right here and say, oh, okay, that's it, the move's over. Nah, you know what? You want to wait this out a little bit and wait for a little bit more clarity. Okay, you never want to try and pick the absolute bottom, but you want to sit back and see what's happening. Today could be what we call a classic dead cat bounce. All right, when you have the Dow off 500 points yesterday. All right, an up move of 100 points is very little in the grand scheme of things. So Bernanke's going to come out. Let's see what he does. I mean, QE3, people are concerned about that. That's going to weaken the dollar further. That's one of the reasons why euro's been sitting around where it is. All right, is he going to go down that road? And if he does the market say, oh, okay, great, thank God, let's go back to buying stocks, everything's good again? Or do they say, wow, things are really this bad that he's going on the QE3 route? So, we want to get out now even more. So it's a double-edged sword, and things don't look good. But, what it comes down to here in the U.S. is that we need to get back to growth. All right, we need pro-growth policies. And I don't care how many times the guy gets on television, reads the teleprompter, and says we have pro-growth policies. We do not. All right, GDP is very simple. All right, GDP represents the growth of a country, and all it is, it's a mathematical equation. All right, GDP equals consumer spending plus government spending plus business investment plus net exports. All right, 4 components to GDP. All right, we know that because we have high unemployment, consumer spending is down. We know that because of tax and regulation and Obamacare, all right, we have business investment down. All right, we know that we have net exports down because China keeps a peg to the U.S. dollar, and regardless of how low the dollar goes, all right, we're still less desirable manufacturing place than China is. All right, and that's even if we do manufacture anymore, which I can't even say with certainty we do. All right, so the last component is government spending. We just saw the debt ceiling debate. They want to lower government spending, which is a good idea because you want to get those other areas moving. Okay, but you have to tackle the issues that are surrounding each component. All right, and that's going to be the way to fix the economy. So I'll get into that a little bit more as the week goes on, but let's wait and see what Bernanke's got to say. Otherwise, today looks like it may be a respite from the selling, but I'm not ready to say a bottom's in just yet. So that's what I've got for today, folks. Good trading to all.